Prashant Tripathy, MD and CEO of Max Life Insurance, joining us now. Mr. Tripathy, great to have you with us. Let's talk about the performance this past quarter. It was overall a pretty good quarter. Key highlights, if you could share with us, and what really led to the strong APE growth and the VNB?
Thank you very much for having me here. Yes, that's correct. I'm very delighted with how the last quarter went. We grew about 36% on APE basis for the quarter. Our VNB was pretty robust, 44%. And as a result of these two vectors, for the entire year, our VNB has grown 39% and our APE has grown 19%. These are industry top numbers. And what led to this kind of performance is a fourfold reasons. Reason number one was throughout the year, I think the digital agility with which Max Life approached the lockdown first, and we continue to outperform throughout the year. Our performance at Axis Bank it has also been very robust, and that's another reason why we did well. Across all channels, we saw growth, our own channels as well as Yes Bank in quarter three and quarter four, and that drove growth. And more than anything else, I think the VNB upside came from very smart product mix change, moving more towards protection throughout the year, and also rebalancing the product mix in favor of non-par saving design, guaranteed designs. Those are reasons why our performance for the full year, and especially for quarter four, was so robust.
Okay. Also talk to us about the impact of the second wave, and now that that's easing, what's the likely scenario when it comes to the claim ratio?
I think overall, let me first talk about the industry. Unlike last year when there was a big impact on industry growth numbers, this year industry has been pretty strong for the first 2 months. I have noticed that for both months, at least the private life insurance industry has recorded growth. Private life insurance industry for the first 2 months about 35-36% growth, which is pretty robust over last year. However, we must remember that it was small base effect. We are seeing higher instances of claims, and it will be premature actually because claims come with a lag of about 4 to 6 weeks, so maybe a bit premature, but suffices to say that we have seen higher instances of claims this year. Max Life Insurance, especially to protect ourselves for future claims, we have kept about 500 crores in our balance sheet to take care of wave 2 or wave 3. So we feel very confident that with the kind of buffer that we carry in our balance sheet, we'll be able to manage wave 2 quite well.
Right. Prashant, your embedded value has shown a growth rate of about 18.5%. What would be the key drivers going forward? And what is the growth that you are expecting for FY22?
That's a very good question. If you look at the 18.5% growth rate, that's quite robust. But we also kept EV reserves for the wave 2, which means our actual embedded value, operating embedded value, was closer to 23%, which is significantly higher than last year. So we kind of went conservative without knowing how wave 2 will play out. So we kept some provisions in embedded value. Going forward, there are the reasons why we saw such robust growth is, of course, the VNB growth, which is margin growth as well as sales growth. Those are two key factors why we saw very robust return on embedded value. Going forward, I think the journey of Max Life Insurance, along with Axis Bank, the foundation that we have built together, and now Axis Bank being our promoter, will create new avenues for growth for Max Life Insurance. So the robustness of relationship with Axis Bank, there is a big program that we're running around our growth of our own channels, those two put together, and our bet on moving towards more health, retirement and protection. Those spaces, I expect, will continue to give momentum to our margins. Those factors put together will continue to keep our return on embedded value pretty robust. We target close to about 20%.
Sure. In terms of your product mix, non-par has seen a significant increase from what I can see. What's the outlook then on the overall product mix going forward, and how do you see protection, ULIPs, the entire share actually shaping up?
Yes. So currently, the kind of product mix that we are at is pretty balanced. If you look at the overall product mix, we have about 30%, close to about 30% of non-par savings. The other part, ULIP is close to about 35, and the balance is par and protection. That's really a very diversified product mix, and we aim to maintain that kind of product mix, maybe tactically shifting between par and non-par a little bit. On protection, our objective is to keep it upwards of 10%. So we will target anywhere between 10 to 13, 14% in near future. Those are numbers that we're working towards. But I must tell you that with a lot of effort, we kind of hit a product mix which is very diversified, which is ideal. We kind of optimize the customer needs and the margin outcomes, and we're very happy about it.
Morning, Prashant. Nikunj also joining in. In last 6 months, the cost of insurance has gone higher, and that is largely because the reinsurance players have hiked the prices. Do you see a sharp increase post the second wave?
I think suffices to say, Nikunj, that the reinsurance companies have, on one side, of course, they have been mindful that the claims are going up. But as far as price increase is concerned, they have not factored in the COVID claims, because the general belief is that the COVID claims are one-off and they will go away. Now, as the trend emerges and we find that post-vaccination, the instances of COVID actually, instances of death because of COVID actually goes down drastically, I think COVID will be just a wave which will pass away, and the prices will hold on. But if COVID causes a permanent shift in mortality experience, to some extent, it may be possible because of deep-rooted impact of COVID on a large number of customer base, then there may be an increase. Very hard to predict at this point of time, but working very closely with reinsurers, I must tell you that they have taken a pragmatic view. They have not taken a blind view of COVID.
Personally, when I look at the industry growth, a year ago when COVID hit us, my view was that, okay, the fear to buy insurance is only going to increase and the need for protection will only go higher and the industry will go through an explosive growth. But the need of the hour, which is to buy protection, has not really translated into any great gains for the industry. I'm not talking about Max, but across the board now, considering the circumstances we are in. Somewhere, are you surprised with that?
Nikunj, you would have noticed we actually run every year a survey called India Protection Quotient, where we go and ask consumers at large in top 25 cities and ask them the question about their view about protection. And despite how we in large cities perceive protection, the level of penetration of protection as well as awareness continues to be very low. Hence, expecting that protection suddenly will jump up from whatever X% to 3X, etc., is not going to happen. I think it will take longer time, longer duration. But if you look at protection as a segment, it is going to be a high growth segment for many years to come, because slowly the penetration will increase. There is a direct correlation between how pandemic behaves and how people get scared and then the demand. So for example, last year, you may recall in the first quarter or first 2 quarters, the demand was pretty high. But then the demand subsided as the COVID went down. Suddenly, I'm again seeing in the month of April and May that demand to come back, and it shows up not just in terms of number of policies that we sell, but Google search queries, etc., also jump up. So hopefully, I'm very optimistic that as awareness increases, people will continue to buy protection. And for us, it's been the highest growth segment. We've grown about over 50% year on year for the last 5 years, and I expect that growth or that momentum will sustain over the next few years.
I'm tempted to come back to the tie-up the change of promoter in your case, which is Axis Bank. You already had a relationship with Axis Bank. You were using the distribution channel very smartly. But the fact that they've become the promoter now or majority holder now, what changes? How will the equation change? Because you already had an existing equation with them. The support was there. They were invested in Max. What changes now?
Yes, the relationship with Axis Bank is now 11 years old. Of that, about 10 years, more than 10 years, they were our major distributor partners. And every year they did close to about 55% of our sales, 55 to 60% of our sales. So that relationship was always very strong. But as you know, there is a fundamental change that takes place when a distributor chooses to also become a promoter in the organization. Now, the overall engagement is much deeper, and I'll tell you a few pointers. Number one, there are at least 3 board members who are Axis representatives on our board, and they are very senior management team members. They bring expertise in the area of retail, finance, the insurance, technology, HR. So, there is this strong leadership that we are going to benefit from sitting in our board, number one. Number two, we, in our brand tagline, now we will be joint venture of Max Financial and Axis Bank. So we are going to leverage to some extent or have a rub-off from the Axis brand in our overall tagline. And co-ownership of organizational agenda. I mean, so far the relationship was mostly around distribution. So distribution is mostly around sales and compensation, commission. But now Axis Bank is going to co-own the agenda along with Max Financial on company growth rate, financials, margin, embedded value, stock price, etc., etc. So I think we are tied more closely, perhaps, the best thing that could happen to Max Life Insurance. And, I have been tasked as the CEO of Max Life Insurance. I have been tasked by the board, which is representative from Axis Bank, Max Financial, as well as independents, to look at the next wave of growth and strategy with co-ownership from Axis Bank. So I think our stars are all positioned now. Max Life Insurance did very well over the last 5 years. It definitely positioned itself as a very strong player. Now, I think the situation demands that we next look at the next wave or next trajectory of growth and evolution under, of course, complete ownership as parent organization from Axis Bank as well as Max Financial Services.
Good luck. Exciting days ahead for all of us. Thank you for joining us.